Everyone, I am Abhijit and welcome to a new episode of Investing Fool where we discuss about DIY momentum investing. It's been a while since the last video. In today's video, we'll discuss about how the market has been behaving, some of the news around some of our portfolio stocks. Earning season bhi chal rahi hai, so there are news regarding that as well. We'll look at some charts. We'll look at the Nifty top 10 portfolio as well. So lots of things to cover. Anyway, the rebalancing is due in 2 days, so that video will be out on Thursday. So let's just begin. So the familiar disclaimer that none of the stocks discussed here are financial recommendation. Please consult your financial advisor before making any investment. This is for education purposes only. Right. So when we talk about the market in general, so Nifty has been in very close reach of 25,000. So we are, it's almost kissing it, but not quite able to cross it. We'll see whether it's able to cross this hurdle in the next few days. But there has been a cat and mouse game between the broader market stocks and the Nifty stocks. On some days, like a few sessions ago, the Nifty stocks were performing. The Nifty was in general performing much better than some of the broader market stocks. But in some recent sessions, that trend again has reversed. So this will kind of continue to go on. Let's just take a look at our portfolio also. So if we look at today's session, this is our core portfolio. And for those of you who are watching this video for the first time, so all the stocks that we discuss in our portfolio have been like public. We do inform update on this channel whenever we buy and sell these stocks. So if you want to follow this portfolio, we started with a notional investment of 20 lakhs distributed across 20 stocks of the Nifty 500 universe. So top 20 momentum, top 20 ranked stocks in terms of momentum. So we have been doing this for over 8 months now, and we will be doing this hopefully for many years and probably decades to come. So if you want to stay updated with this, please consider subscribing to this channel. And if we look at today's performance, so some of the shipbuilding stocks were in green. So you see Cochin Shipyard was up 3.4%, GRSE was in upper circuit again with 5% gain. Yesterday also Cochin Shipyard and GRSE were in upper circuit, both with 5% gain. If we look at some of the other stocks in the defense pack, then Hindustan Aeronautics was down 1.6%, BEL, which declared results and they were good results, yesterday was again down, today 1.1%. And the other stocks have been a mixed bag. So there have been some intraday movements as well. I think Zomato was high intraday, but again it came back. Trent also, there was a lot of here and there movement in Trent. So we'll look at all these stocks. Overall, if we look at how like the absolute returns till now, so we were within 1% of the benchmark index till a few sessions ago, and there was a very high likelihood, there still is, that in case of further downturn, when the market starts correcting even a little bit, our portfolio returns in the near term will go below the benchmark returns, right? So that didn't happen. So some of the stocks actually started consolidating and rebounding after the budget shocker. We will look at some charts, but now we are more than like 3%. So the alpha is like more than 3%. And if like a positive bias in the market continues, then we might even stretch it further, right? Because we were, remember, like we were almost like 9% above the benchmark before this budget related concerns started surfacing and dragged the market down, right? So let's see how it goes. And one thing that could be a dent in this, in us regaining the alpha, is if a huge bout of sector rotation starts in the market. Some signs of it are there, but we are not quite sure yet. So we'll see how our screener, what it tells us about the market, and we are going to take the decisions accordingly. A large part of being a systematic investor, and momentum investing is a subset of that, is just staying in the market, and once you've finalized your strategy, just sticking to it with discipline, not doing much anyway, just trying to absorb what the market is trying to tell you, and just sticking with your strategy, right? So that's what we will do. So the market has actually disregarded a lot of negative news. So the budget shocker also came, and many market participants had expected the market to fall further, but somehow it absorbed it in its stride, and it says ki I have my own rhythm, I'll go up, I want to go up. So we should always listen to what the market is trying to tell us. Anyway, the Nifty is touching like almost at its all-time high. It has been for quite some sessions, and there is in general a bullish bias across sectors in the market, uh, except banking maybe, right? So there could be some sector rotation. If we look at the sectors, right, the sectoral indices here. So if we look at the 1 month return, if we look at the 1 month change here, so IT has been the best performer in the last 1 month, followed by Nifty Pharma, right? So IT and Pharma are traditionally considered as conservative bets in the market, right? So these are relatively conservative pockets, and probably the budget related issues is why some of the money flowed into these sectors. But this could be a long term like bullish trend also. IT has not been performing that well for some time, so maybe this could be the start of a new cycle, of a new uptrend cycle. So we'll have to see. In our screener, the topmost IT stock as of now is Oracle, OFSS, and that has come within the top 5 ranks. Actually, we in the past we have had OFSS, but it had exited with a loss. We had also had KPIT Tech and I think Sonata, right? So Sonata Software. So these stocks were there. Birla Software was there. That exited with quite a lot of gains. You can see all the exited stocks in the exits tab in this portfolio sheet as well. So all these are stocks that we have exited in the past, right? Anyway, coming back to the slides. So we have a couple of news regarding the earnings, so we'll just quickly cover that. We'll try to keep this video short. So Dixon actually declared its results today. So revenue and net profit both grew by more than 100%. So revenue I think grew by around 100%, net profit around 110% year on year. Hitachi Energy, the script symbol is Power India, that also declared the results a few days ago. The Q1 profit rose by 332% to around 10 crores. Yesterday, Bharat Electronics, BEL, had reported better than expected earnings. Q1 FY25 profit was up by around 46% YOY, and revenue was up 20% YOY. The stock was up, I think, around 4% or something yesterday, but today again it was down. So there is no consistent trend, and we'll talk about all these different stocks. A lot of them has slid down from the top, and they're not quite regaining the like position or the leadership as quickly as one you would expect, right? So there could be some topping out in some of these stocks. We'll have to wait and watch. Regarding the future, so Trent and Zomato may report, this is according to brokerage estimates, may report 105% and 64% rise in quarterly profit year on year respectively. Zomato will probably declare it on August 1, so day after tomorrow, the day we'll do our rebalancing. So yeah, that's there. Gold as a commodity, after the budget shocker, it has fallen. If you look at the chart on the right side, right, from the top, gold B's, which is like gold in INR, has fallen by almost 7%. Could fall a little bit more also. From a long-term perspective, gold should be a part of your asset allocation strategy. Like something like a 30-70 gold to equity is a decent asset allocation, I would say. But these kind of matlab fair badal by the government, right, a lot of tinkering with the custom duty and all those things, they are kind of negative in terms of the investor sentiment, if you just look at it as an investment instrument rather than like buying jewelry and stuff, right? So in the long term, there are mixed signals from ranging from US Fed rate cuts to geopolitical tensions in the Middle East and everything, right? So it's a mixed bag. There is no definite trend that where gold is going to go, but overall there is still a little bit of a bullish inclination to the sentiment when it comes to gold. At the end of this cycle, so at the end of this month, basically when we rebalance, out of the current 20 stocks in our portfolio, only one stock could exit the portfolio, that is Shobha. Shobha grew today. It was actually falling for quite some days. It was up by 2% today, I think. Let me just check quickly. Shobha. Yeah, it was up by 2% today. So if it continues to rise tomorrow as well, then it could stay in the portfolio. Otherwise, it could be kicked out of the portfolio because it was outside the top 50 ranks, I think, after yesterday. So we ideally we do not want to do a lot of churn in the portfolio, and recently after the tax hammer, anyway we should not be doing too much fair badal in our portfolio. So I want to minimize churn from my side, but it has to be within the constraints of the strategy, right? If the strategy says that it is beyond the top 50 ranks and you have to get out of the stock, then you have to get out. You can't you can't force your conviction or your beliefs on the strategy rules, right? So Trent is actually the oldest stock in the portfolio now. So we bought it I think in December 2023, and it has been more than 7 months now in the portfolio. And during the budget day, I'm not sure why Trent was hammered so much, maybe because of valuations, but because this is a consumer stock, right? So consumer sentiment was not really affected with the budget, but somehow it got hammered. Like on one day it was like down 6.6% or something, again the next day it was down. But you have to remember that as long as your strategy, I mean, does not give you a clear signal to exit, right? So there is signal in the market and there is noise in the market. You have to differentiate between what is a signal and what is a noise. Oftentimes there is a lot of short-term noise and you have to discount that. You don't have to like get into all that. So you don't have to sell in panic for sure. That is what I had said in the last video as well. So when you after this fall, it's started like gaining quickly, and you can see there have been like 7 consecutive green sessions, and it is very close to its all-time high now. And there is the expectation that results might be good. Results are around the corner for Trent. Results might be good, and if it crosses this all-time high, then that's a very, very bullish signal for this company, and the stock could even go higher. So currently in our portfolio, it is sitting at a profit of around 88%, and this could push it to like beyond 90% also. We'll see where it goes. Some of the stocks are at all-time highs. They have retraced a little bit. So Zydus fell today. Zydus Life is on the right hand side, and Zomato you can see on the left hand side. Zomato had also touched 230, but again there was some pullback. So but they are still hovering around the all-time high, right? So it's a very positive signal when your stocks are hovering around the all-time high, because there is still conviction, right? And out of the new age stocks, brokerages are very like decently bullish on Zomato, I would say. And pharma as a sector itself is doing well, right? So I think Divi's Labs, I think other pharma stocks also, and Zydus is in our portfolio. So these have been doing well. So yeah, both of these stocks have been showing a bullish trend. Now Shobha we already discussed. Shobha could be out of this portfolio this time. If you look at this trend, it has not gone beyond this range, but somehow like when we do a relative ranking of stocks in terms of momentum, right, it's not that one stock has performed so badly that it is getting out of rank. It could be that other stocks have performed so well that they have basically pushed this stock outside of the top 50, right? So it is relative underperformance to other stocks that kind of pushes you down. So maybe because of that, Shobha is like out of the top 50 currently. But if you look at the last few sessions, it has been like a mix of red and green candles. The stock is basically going nowhere. It is kind of consolidating. It has risen too much, and this is a little bit of a concern, especially given that the realty index is still going strong, right? Still it is okay, I guess. Let's take a look at the realty index here. So realty index today was positive. 1 week is also positive. 1 month it has not done much. 1 year you can see it's almost 100% rise, right? So but yet, yeah, when the stock has risen too much, maybe it requires a little bit of breathing room. So I personally believe that the uptrend is still intact, the bullishness is still intact, and there could be some bit of further consolidation for Shobha before these and other realty stocks try to move up again, because typically real estate cycles are long drawn out cycles. They do not end in like 2-3 years, right? Okay, now we will discuss about the defense stocks. So there was kind of a dampener in terms of the sector allocation to the defense sector in the budget. So in the interim budget in Feb, the sector allocation was around 6.2 lakh crore. That was brought down to 4.5 lakh crore for the entire defense. This includes the revenue and capex both. So the point here is, can defense PSUs still continue their uptrend, right? And some of these are pure play defense, some of these are defense and like shipbuilding mixed into one, like Cochin Shipyard, GRSE, Mazgaon Dock, all these stocks, right? So if you look at most of these stocks, right, the same kind of pattern that you see over here. So these huge red candles are the June 4 election verdict shocker candles, and these downturns are during the budget, right? So after the budget, most of them have lost from their all-time high, but in the last few sessions, some of them have tried to go up, to go further up, right? So if you see Cochin Shipyard here, from 2 days it has been performing nicely. GRSE also, it has been performing nicely. Hindustan Aeronautics today was a red candle, but before that there were 3 consecutive green candles, and BEL, the same story, right? So there is a little bit of like I'm not sure if it should be called consolidation or something, but somewhere it feels like the sector is not as ready to go again as it was previously, right? So it could be a long drawn out thing for us. If we look at the returns from some of these stocks, then I think BDL we are still in loss. Bharat Dynamics, we are still 5% in loss. BEL 10% profit. HAL is 65% profit. This was close to 87% profit. We have almost lost a lot of profits. And Cochin Shipyard, which was above 200%, it is now around to 198% profit, right? So we'll have to see whether this like reduction in sector allocation has any material impact, because and we'll also have to see how the order books keep developing, because as I always say that in bank you have to look at loan books, and in capex and these kind of companies you have to look at the order books. So the order books should be filled, that visibility should be there. As long as that is there, and as long as the overall market sentiment is positive, these stocks should bounce back. That is my personal opinion. Another thing that I actually forgot to tell is about BEL. So we discussed the results of BEL, and there was another recent news that so recently Mazgaon Dock has will be getting this contract, or at least is the front runner to construct 3 more Scorpion class submarines for the Indian Navy. These are the Kalvari class submarines, and the existing 6 ones, I think the 6th one is going to be delivered before this year end, and 3 additional Scorpion submarines will be created. So the combat management system of these submarines will be created by BEL. So that is one additional thing that could come in the kitty of BEL. Just thought I would mention that before we discuss about the Nifty top 10 portfolio. So let's take a look at let's take a 1 minute look. So this will also get rebalanced at the end of this month. So we'll probably make a separate video on the same. And if we look at the returns now, it is at a healthy like 4% difference from the Nifty 50, with Mahindra and Mahindra being the top performer. Mahindra and Mahindra is actually also within the top 20, even in the Nifty 500 momentum screener, right? So the run has been good for some of the auto stocks, and the criteria here, the exit criteria here is very tight, in the sense that if anyone drops beyond 10, then we sort of kick that stock out of the portfolio. We do not have any leg room there, so there could be some churn at the end of this month. We'll see how it goes. So yeah, that's it for today. Let me know if you like this video. Please comment on what you have been thinking about the market, how your stocks have been performing. With a lot of comments, there could be a lot of engagement in this community as well, and it could lead this video to reach out to other like-minded viewers as well. So thank you for watching this video, and stay tuned for the rebalancing video on day after tomorrow. Till then, have a good day. Bye bye.